Hi everyone, welcome back to Be Rich. I hope you had a wonderful weekend and this is Sunday evening as you're getting ready to jump into the week ahead. Yes, it's been a fast month. Always Feb seems like a fast month. We're already reaching the ends of Feb and day 39 is tomorrow. And I hope you've been investing in Tiffin coffee as they say. Whole of last week I covered about the Tata Group and maybe the way you should think about it as an investor, how one should project and try to find value going forward, and try to find these businesses and these moats which may crop up in the future where we can find these opportunities for some real capital appreciation. And I like some of the comments which I was getting, and I really appreciate the feedback and the support you guys have given me in doing that. So thank you for that. What I wanted to talk about today was a lot of you have been asking me on Instagram, has the market really corrected? Has the market really corrected? Can we really, spread our wings and look at everything what we wanted to? And the reason why I keep saying no, stay in the same list, don't venture out too far, and keep staying in Tiffin coffee range, because though the news talks about huge corrections, though the news talks about this and that, if you really look into it and peer behind the curtain and see, has it really moved anywhere for a value investor? Has really value opened up in the market? It hasn't, except for those few companies which we've been tracking and looking at. Yes, we are in the red. Even I am in the red. Stocks like Natco has pushed us deep into the red, which is okay. Nothing to panic about. We know the company, we know the products they're selling, we know the management, and we should have good faith. And there's even news about them looking at acquiring an American company. So things are looking good. Don't panic. But at the same time, don't have exuberance. Irrational exuberance is also bad. Any kind of emotion in extremes are bad. Emotions should be balanced, and we should be in control of our emotions as an investor. And this is paramount. And case in point is, I wanted to walk through just to show you how far we have yet to go to coming into somewhere where we can just go ahead and buy willy-nilly, as they say, and walk around and shop as much as we want because there's a grand sale going on. To show how far away that is, I just wanted to walk through this list of last year's. Me and Anand in the beginning of Jan, we spoke about last year's company and how we had done remarkably well in some of the companies, and some of them we didn't do so remarkably well last year, and we had reviewed that video. If you want to see that video, go catch it so you can see that video and see the contrast of where we were and where we are, because it's still a long way to go. Like, for example, Stovecraft, it's not on my list as yet. Why? Because I feel it's too expensive. Natcos, they're on my list. Obviously, I would say it is so good to see Natco in this range, because ranges of Natco at this range are rare. So, I take this opportunity and I indulge myself in Natco. Petronet LNG, right? No, I can't put it on my list. Divi's Lab, it's not on my list. Cosmo First, not on my list. The next one, Amaraj Battery, right? I would say some of you would probably feel like you're ready for it. I would say I would wait for some more time. I am personally looking at it reaching another, ticking a number lower, then I would probably be more interested in Amaraj Battery. So I would wait for some more, market movement in Amaraj before I say yes. But if you are, looking at it, I would say you can. It's on the fence, Amaraj Battery. Muthoot Finance, still not on my list. Thangamai, not on my list. And Zydus Life Sciences is another one where I'm on the fence. As a long-term investor, yes, you can look at it. But, since Natco and Dr. Reddy are there, I'm a little bit of a toss-up on this. Because right now, there are 3 pharma companies which I'm currently looking at, which would be Natco, Dr. Reddy, and Zydus. But out of the 3, Zydus is the most expensive for me, personally. So, think about it. It's on the fence for a lot of you. Kaveri Seeds, it's not on my list as yet. Tech Mahindra, not on my list. Bajaj Auto, not on my list. Federal Bank, there are other great banks which we're looking at, which is the South Indian Bank, Karnataka Bank, IDFC Bank. IndusInd Bank is slowly getting out of my list because its market is starting to wake up to IndusInd Bank where it's been sitting. So it's slowly leaving my list, I would say, because if I look at South Indian Bank, IDFC Bank, and Karnataka Bank, I don't know. So getting back, Federal Bank is not on my list. HCL Tech, nowhere near where I wanted to be. Actually, none of the IT companies I'm touching right now, because for a simple reason, with Trump's tariffs, where the dollar is, where the rupee is, and all this confusion about the H-1B visas and whatnot, and the projected revenues, I would keep an eye on the tech sector as a whole, unless I see something massive happening in the market in terms of correction. Right now, I would not touch any of the tech stocks. That's my personal opinion. I'm not looking at them. So Infi is a no-no, HCL is a no-no, even TCS, though it has moved in the market, I'm not putting it on my list as yet. I'm still waiting. Exide Battery, hasn't come into my list. Cipla, not on my list as fully as yet. It's still on the fence for me. There are days when I look at Cipla and I feel like it. Then I look at Natco and Dr. Reddy and Zydus Life Science and I feel like, maybe that is better, because that's where Cipla is sitting. It's sitting close to it, to getting onto my list, but not as yet. TTK Prestige, I did talk about this, what a great brand is, what a great company it is, but still, it's on the fence for me because I would need to see it move a little more for me to really get excited about it. Manappuram, yes, it's been on our list for some time, but it's teetering on going out of our list because the market has kind of like woken up to it and they've realized the value in it, and it's slowly becoming expensive for me. There are days when it moves, people are profit booking, as they say. When it opens up again, then it slowly seems like doors are shutting again. So keep it in mind. I have a certain value which I look at. When it exits that value, especially price to book, is what I look at in Manappuram. When it comes close to that, then I'm like, there are other things, other finance companies which I look at price to book, which look more attractive. Nothing wrong with Manappuram. ITC is always there on my list because I feel that company is very much undervalued in the sector it's sitting in, with the potential it has, the brands it has, and the management, everything put together. I do feel it is undervalued company. But like I said, the famous quote, markets can remain far more irrational than you can remain solvent. Meaning that, let's say you invest in something hoping that it will appreciate in capital. Markets might be ignoring it for a very long time before it wakes up to see there is value in what you're doing and pushing the capital up. So you may sit on a stock for a long time without seeing much, happening, and suddenly Mr. Market wakes up to it too, and then it goes to the sky. So that can be a very frustrating wait to see happen. So that is the main essence of that quote. Especially if you're, some of you have struggling with Natco because, you're down 20%, 50%, 40%, and you feel like throwing in the towel. I understand. It can remain, you can feel like that. But if you don't need the capital, if you don't need to pull your money out, I would say be brave. If you're willing to wait for, 5 years plus, you will definitely see a great opportunity in Natco if you're willing to wait it out for 5 years, 10 years. That's what I'm doing. Whatever is capital which I'm putting into Natco, I don't need to see it for the next 10 years. So I'm willing to wait it out. If you're willing to wait it out, then do it. And like I keep saying this over and over again, we are looking at, I did a video with Shashwat yesterday, which you've seen about dollar cost averaging, how a person managed to do that with Berkshire Hathaway. And it applies to us too in our Tiffin Coffee range. Our amounts are much smaller, of course. I see a lot of you reaching out to me on Instagram saying, I'm putting 1 lakh, I'm putting 2 lakh. Please do not do that. That is not Tiffin Coffee range investing at all. Anyone who has put in, 1 lakh or 2 lakh in the beginning of the year in stocks would be seeing a lot of red, and that red can be very painful. So a lot of you are entrepreneurs, you're doing side hustles, you're doing business, you work very hard to earn this money. And it is very, very demoralizing to see your capital turn, into losing quarter, losing half its value when you feel like you've not done anything wrong. I understand that feeling. So be careful. Don't venture out with huge chunks of money into the market. We're nowhere there. If you do have those kinds of chunks of money, there are lots and lots of opportunities in gold and in bonds. Look at that. If you have money which you need in the next year or two, like I said, gold is a great place to park your cash and leave it there. It's very safe. Or if you have a longer horizon, then you can look at bonds. There are lots of great bonds, and you can do that too. And from the interest from those bonds, you can invest it in stocks. That way your capital is safe. The money which you worked so hard to earn, that at least remains intact. Whatever the small interest that comes, that is what you're playing with, and you won't mind because chunk of cash which you put in is still there holding ground. So this is what I wanted to talk about as a motivation, to tell you that we're nowhere near to see these kinds of so-called opportunities in the market. We have a long way to go in terms of corrections in market coming down, where you can go and buy whatever you want. Please be disciplined, stay to our list, keep doing in Tiffin Coffee ranges, and keep pegging away day after day, week after week, and we'll get there. Like I said, we are in it for the long haul. I didn't want to start off this whole project saying I'm looking at it as a 10-year thing, where you're going to see me on Instagram and YouTube or whatever ways we can communicate 10 years from now. I'm not even sure if we'll have Instagram and YouTube 10 years from now. Whatever is there at that point in time, we'll try and stay in touch and keep it going and stay together as we reach that goal 10 years from now in this Tiffin Coffee, and show you practically that wealth can be created by small investments over a long period of time. That's the whole essence of this. I'm not here talking about creating, extraordinary returns or trading and all that. All that is not in my cup of tea. I'm here to help us stay disciplined, keep that focused approach and that mindset, and to keep investing. That's all. Anyway, thanks for watching the video today. Hope you had a wonderful weekend and hope you have recovered and you're recharged and get into your week ahead of work and whatnot. Do keep investing. Like I said, don't spend more than 5-10 minutes in the market. Log in, invest, and log out. You're not doing this as a work like what I'm doing or Dana's doing, where you need to keep looking at the market every now and then, and get really anxious about it. So you have other things to do. Go do that. Leave the market and all that aside after you finish investing and moving on. Thanks for watching the video. As always, wishing you a wonderful week ahead again. Bye.